What's going on, YouTube? We are going to go through Lululemon Athletica, ticker symbol LULU. We can see 52-week range. Company last week hit new 52-week lows. And in the last year, company's down 6%. Year to date, though, company is down 39%. Last week, though, once this did hit new 52-week lows, I did finally begin a position in Lulu. Pretty excited about it. Hopefully this range holds. We'll see that on the technical chart pattern once we get to that. Lulu reported their earnings March 21st, beat on top and bottom lines. And we can see guided for next quarter, 242, and EPS revisions though, 17 made lower, 1 revised up higher. We can see also this most recent quarter, 529 EPS. This guided next quarter, 242 for an EPS. So might be wondering why it's cut in half. We come down here, you can see Q1 to Q3, pretty nominal quarters in comparison to Q4. So obviously very seasonal company with the holiday season at the end of the year. So we can see Q5 ticks back up to almost $6 per share for EPS. And then company guided Q1 revenue to be in the range of 2.1, basically $2.2 billion, consensus of 2.26, so slightly below consensus. Q1 EPS to fall in the range of 235 to 240. So analysts, we can see back here, are guiding on the top end, even slightly above where the company even gave them guidance towards. Full year revenue of about 10.7 to 10.8 billion dollars versus 11 billion dollars in consensus, so slightly below what analysts were expecting. And they also are guiding for full year EPS of $14 to $15.20 versus $14.26. So consensus is on the low end of where the company is giving EPS guidance. So that could potentially then be including some sort of stock buyback. Maybe that's why it's such a big range potentially. Company does buy back a lot of shares. So, and we'll see that once we get over to their 10Q. So over to the financial, the valuation spreadsheet. We got revenue, gross profit, net income, all three trending higher. Revenue's really started to take off the last few years. Net income, same thing, stair-stepping its way up higher. Very nice net income growth there. Gross margins, 59.4% last quarter, best margins on the board. Net margins, also similar story. Last quarter, 20.9%, best margins it has seen. Then down here, return on invested capital, 27%. We got a PE ratio today sitting at about 25.5, so on historic lows based on these last few years on Lulu. Cash to short-term debt. Company has more cash than short-term debt, which is always fantastic to see. Cash to total debt. They do not have quite enough cash to cover total debts, but not too far from it. Scroll over here to free cash flow. This most recent year, company did fantastic free cash flows. Best it's ever seen. Continues to grow free cash flows though year over year, except for last year. Must have been a little bit of a fluke year for them. But overall, pretty good growth on free cash flows. Capital expenditures also starting to grow. They've doubled in the last few years, but they've also been doing a lot of growth to expand the business as well. So to be expected there. Share count dilution, they do buy back shares and continue to do so, as we can see in the last quarter. Common stock repurchased about $54 million worth of shares. So pretty solid there. But we can see a company in the last 3 years has bought back quite a bit worth of shares. Over to their 10Q, we're looking at the balance sheet. Year over year comparison here. And we've got $1.1 billion last year, doubled their cash position in 1 year. So very good. They're up to $2.2 billion in cash. Then we scroll down here to their liabilities. So we carry down our $2.2 billion in cash. We have $1.6 billion in short-term debt, which leaves us about $650 million extra in cash to pay for our long-term debt. And our long-term debt is basically these 4 row items here in total for about $1.2 billion. So basically $600 million short of covering all of their current debts, which is pretty awesome to see. So overall, very strong balance sheet. Pretty happy with that. So down here to our income statement, we can see revenues consistently grow year over year. Very good growth. We got good gross profits that are consistent. We then come down to our net incomes, and we can see last year they had either an impairment of goodwill or restructuring costs. That really hit their overall net incomes quite a bit last year. If you were to add that back in, they would have done pretty good last year as well for net incomes. But this year they did very good as well, $1.55 billion in net income. So very solid. Then we come down to our cash flows. Get to carry our net incomes down 1.5. We can see stock-based compensation is company pretty nominal amount. Nothing to be too worried about at all at 95 or $93 million in stock-based comp in a year. Then we got our inventories, which played a big part in the last 2 years really for inventories into their cash from operating activities. Kind of hit last year pretty hard with $573 million expense into inventories. Whereas this year we're able to sell through some inventories and then get $67 million back into cash flows that flowed back into the business there. So overall, it gives us $2.3 billion in cash from operating activities. And then we subtract off our capital expenditures of $652 million. Free cash flow, $1.65 billion. And with that big free cash flow, that's where we see this significant increase in cash position that gets added into our last cash position for a total of $2.2 billion right there. Over to the comps, I pulled in Nike for a comparable. We come down here to our charts and we can see in comparison on just market cap, Nike significantly larger market cap than Lulu. We can see revenue on Nike, $52 billion, where Lulu sitting shy of $10 billion on overall total revenues. And we got growth rate over here. Lulu expected to have some bigger growth rates than Nike. And we got our margins down here as well. We can see margins on Lulu much better than Nike, and they continue to get better. So that's pretty awesome to see. Free cash flow is not as good as Nike, but then again, they don't bring in as much revenue as Nike does. So either way, still positive free cash flows for both businesses. And we got a PE ratio here, identical PE ranges for both businesses, but I'd have to say Lulu, much better margins, probably better place for your money at the current time, in my opinion. Over to our calculator, Peter valuation, $177.14. Multiples comparison, 341. Price to book, 5-year average is 13, currently sitting at a 9.3. A peg ratio today of 2, forward-looking peg of just below 2 at 1.87, so fairly valued based on peg ratio. Grams valuation, $307.85 per share. Over to our discounted cash flow. Analysts had a growth rate on free cash flow of 70%. I found that to be a bit excessive, so I gave them 20%, which is the number we're using for this valuation. And that gives them a DCF price per share of $533. Rule 72. We have two sources of EPS growth rate for an average of 15, so we get to then double our current EPS 2 times, which is then 48, which then gives us a fair value today of $366.24. Then over to our final valuation, currently trading at $312 per share. Our fair market value today is $345, with a 30% margin of safety is about $242. And analysts have a price target on this one of $457. So we're going to circle back here and we're going to plug in forward-looking numbers, which we can just pull in from Seeking Alpha. So we have an EPS of 14 and a PE of 22, which is what they're estimating. So 14 for EPS, and we got 22 for our PE. So with those changes on forward-looking numbers, we're looking at P/E fair value of $203 per share, $391 on comparables. Then we got $353 on Graham's valuation. Our discounted cash flow will not change. Rule 72, it'll slightly change up to about 50, and that gives us $381.50 per share there. On that, overall, it gives us a fair market value of $372.49. This is forward looking in the next 12 months. 30% margin safety, $260. And obviously, analyst price target unchanged there. So let's hop over to the stock chart real quick and take a look at this on a technical pattern here. And this one really kind of got me excited last week. So I did pick up some shares. There was somewhere in this I think 300, somewhere around $300 per share, if I remember right. And we can see in this range, probably about 300 down to maybe 260 is a potential buy range on Lulu right now. It's a very heavy support range that's been there since, mid to late 2020. It has been intact since. So very good. This purple trend line though has been broken, which is a little concerning. But we come down here and look at the MACD and the RSI. We can see the MACD is at all-time lows on this company. Same thing with the RSI is pretty close, if not at all-time lows as well. So it gives me some pretty solid confidence that we're going to see a bounce in this, at least in the short term. I'll play a stop loss somewhere down here, about 250, 260. I'd really like to expect this thing to at least get up to 285, maybe 400, and I'll probably trim off some of my position. And if this does pull back into this range, maybe I'll add back in. Just depends on how it's trading and all that. But that's kind of how I'm playing this. I did buy this. I'm pretty excited about this one, actually. I like it on technical pattern. I'm liking it on the indicators as well. The only thing I don't like is this purple line. This long-term trend line did break, but it has broken before, so we'll have to see next week if it can't make its way back through and back into trend next week or maybe the next coming weeks. This is on a weekly chart too, so we'll have to see what happens with this one. Again, pretty excited about it. I like the financials. I think they're strong. I think they're solid. I'm not worried about that whatsoever. We'll just have to see how it's going to trade in the short term and see what Wall Street does with this one. But that is it for Lulu. If you found value in this video, drop a like, subscribe, comment. We'll be back a little later with another stock analysis video.